Okay, good morning, everyone. Welcome. Today is Wednesday, June 24th, and I'm Michael Boutros here just a couple of minutes ahead of the GDP release for the first quarter, guys, about 30 seconds out. I want to welcome everyone to this live intraday strategy webinar on SB Trade Desk. Good morning, Mark, GS, Raj, Steven, JT. Great to see you guys here in the room. So again, we're looking for the revision. This is for the final read on the first quarter GDP. We're expecting an upward revision from negative 0.7 to negative 0.2. Dollar index holding just above near-term support here into the release. And survey says negative 0.2 as expected. Personal consumption bumps up to 2.1%. And core PCE, the Fed's preferred gauge of inflation, right in line with expectations at 0.8%. So broadly supportive of the dollar here near term as far as the data is concerned, whether we'll see that in price action or not. Remember, again, we're turning over here. We're just above near-term support. But the core PCE is certainly the thing that I've been focused on here to see if we're in fact getting that pickup in inflation. And while it is in line with expectation, 0.8, if we look at that 0.8 read historically, that's the lowest read that we've gotten in the inflation gauge since the final quarter, of 2010. Okay, this is the slowest inflation that we've had as far as personal consumption core prices, right? So not a terribly strong number, but certainly not lackluster or weaker than market expectations. So you might not see too much of an impact here right off that release. The other print that we were looking for, like I said, is that GDP final read, and again, that got upwardly revised as expected to negative 0.2%. Personal consumption is a highlight here, topping expectations by 0.2 of a percentage point. So again, we're not going to stress the data, but this release obviously was the main event for the day. Tomorrow you get personal income and personal spending, some more information on the health of the consumer. But certainly one of the largest event risks this week, and it doesn't look like we'll necessarily get much play on that. All right, so let's jump right into the scalps. As always, feel free to throw out any questions or trade setups you guys are looking at. Relative performance to start off the session looks like this. Got the dollar broadly weaker against all its major counterparts today. Or broadly, here we are on the year. On the Kiwi, down 0.41%. And if you look at the dollar index on a daily basis, you can see that yesterday's resistance range that we talked about here in the webinar at 11,880, 11,887 continued to hold as resistance. We saw a nice pullback off that yesterday ahead of the close. Near-term support and near-term bullish invalidation, as far as the scalps are concerned, does remain right at that same exact level, 11,839, 11,843. So you can see if you put these side by side, you're approaching this range right now. So it turns out, by the way, guys, remember we added this near-term median line structure off the lows yesterday. Weren't quite sure that it was in play yet. Caught the highs almost to the tick there on that rally that we saw yesterday. In overnight here ahead of the open, or heading into the open, first couple hours of European trade came right into that highlighted region that we noted yesterday. So still can't get too bearish on this until we get back below 11,840, specifically this highlighted region, lower median line parallel. Note that momentum held 40 on the downside here, so we'll want to see that that condition change as well. But we're broadly looking for that pullback to start to materialize. A break above this, guys, you're basically looking for the upper median line parallel, and that can take you as high as 11,921. Okay, that's this level right here. Actually, you also have the highs, swing highs from that late week that we made around mid-June there. In any event, here's what we're looking at as far as the setups from yesterday. So again, I don't really want to dwell on this chart, guys. If you have any questions on the dollar, please feel free to let me know. Raj says, Mike, has trading been difficult last few months? So much choppiness and trend. Raj, I'm glad that you guys bring this up. Let me know what issues you're running into. First of all, you're going to run into situations, guys, where the broader market conditions are not going to always be the easiest, especially for near-term trading. Okay, A lot of it has to do with the headlines that are coming out and market gyrations that are sort of just sudden impacts, reactions to the data. Again, this is not necessarily going to change trend, going to reverse trend, but certainly can make it a little bit more challenging for intraday trading. Raj, I would just caution you to this. If you find yourself in that situation where you're kind of getting chopped up on some of the scalps, move over to another pair. I would say take a step back and see where your entries are. We went over this yesterday, right? The two things that are could be wrong here on a situation like this. Either your stops are too tight or your entries are too wrong. Raj, if you're talking about general directional bias, you've been in a lot of rangy markets, right? In fact, I'm going to segue real quick. I was just staring at this chart right ahead of the webinar here, guys. Gold, right? Look, I'm going to take a step back here. So we posted this 4 days ago, okay? And this was the gold chart. By the way, this is TradingView. I showed you guys' platform yesterday. It's an online charting package, but it's pretty cool because once you posted the chart, you can actually hit play and it'll load what's happened since then. So 4 days ago, we said, you know what, this thing's coming into 1205. It's a nice 618 retracement, sliding parallel off the high, and the opening range high for the month. A couple of days later, that thing slammed to the bottom, and here we are now checking the lower median line parallel, right? You know, this is as range as a market as you get in decision, right, Raj? And if you're finding yourself sort of finding it hard to ascertain directional bias, again, you got to be knowing where to look, right? There's not going to always be opportunity on every pair every day. Raj says, I'm especially mentioning loads of trades we take in on the swing side. We keep getting stopped out for the break even. Euro dollar Oz, we had a swing trade. I guess break even is better than losses. Haha. Well, again, Raj, first of all, on the swing side of things, again, they're larger setups, right? So if you're taking profit and you put your stop, or I know that we booked half on that, or a small portion of that Aussie, put the stop at break even and trail it. It's the best way to play, Raj, because at the end of the day, we want to hang on to those winners, and we always want to cut those losers early. So I'm actually in that dollar yen swing trade setup. I think that one's going to pan out pretty well. But again, we can't keep, you're going to get stopped out, guys. We're going to have stops. We're going to take losses. That's just the name of the game. The key is over time, guys. You don't measure a strategy based on a couple weeks or a couple of days. The strategy over the length of time has to pay, and that is completely paramount on your risk to reward. So you'll have rough times, Raj. You just got to shrug it off and move right on. The market will always offer more opportunities. So Mark's saying yesterday was quite a day in the euro. Raj says that's true. Patience. Yeah, absolutely. Absolutely. And trust me, talking from a guy who sat on the desk for a couple of years, I've had days weeks where just every scalp was just a loss, and it's frustrating for sure. And that's when you need sometimes to take a step back from the market, guys. It's not going to always be, the setup will not always be there. But again, the success over time is what really matters when you're looking at these strategies. So Raj, I hope that offers some encouragement. Again, if you have any other questions or specifics, feel free to throw them out. I'm more than happy to discuss anything you guys would like. Eileen says, good words. Yup, runs of losses happen. Yeah. And for me, guys, as a strategy, as a rule of thumb, if I'm working a specific scalp setup, the first two scalps go against me, I typically just let it go. There's something called, and this is just, I guess, trade desk talk, but there's something called revenge trading, where you get stopped out of a scalp and the market starts to go in your favor, and all of a sudden you're jumping in again, and you try to press a trade that might not be there, and that's a really bad way to trade. Can lead to a lot of emotional decisions, and emotion is the quintessential enemy of trading. So just keep that in mind, guys. Mark saying revenge trading, did that yesterday, cost me dearly. Oh, Mark, I'm sorry to hear that, man. Eileen says, boy, I've been in my share of revenge trades too. Steven says, I've been there, LOL. Okay, so we have some seasoned guys here with us, and they know exactly what I'm talking about. And if you haven't experienced it, bless you. Try to avoid that type of scenario. And again, remember, it's not a game, guys. Losing sucks. No one wants to lose. But at the end of the day, it's part of the game that we're in. And we need to be able to take that in stride, and we need to be able to also objectively assess what's going wrong. Is it just, listen, the market's in a chop fest right now, there's a lot of back and forth, it might not be the best situation? Or is it, hey, I didn't see this extension or retracement, I didn't see this trend line? Or is it, hey, I jumped in a trade at the wrong time of day, that was the dumbest move? Take a second, look at the trade and see what happens. A lot of times, guys, it's just the market, we didn't interpret it right? And that's fine. It's fine to be wrong. It's going to happen. What matters is when you are wrong, those bumps, those losses are just a fraction of what we make on our gains. So make sure that we have that in view. Eileen says, mostly it's my fault. It's always our fault, right, Eileen? The market's always right. Market's always right. So I'm seeing some comments here in the euro. Let's jump right back into price action. Raj, I hope that offers, again, like I said, some encouragement there. And Mark, feel free to let me know if you have any other questions. Let's jump into the euro. Here's what the scalp looked like as we put out the post yesterday. Here's what the euro dollar looks like on the daily today. So broadly speaking, we highlighted 113.91 at the start of the week. And, we were looking for a pullback early in the week to help us get back on the long side of the trade. At the end of the day, the pullback was much deeper than I would have thought, what I would have suspected. I was looking for that median line that you're looking at here in red to kind of hold that low. It crashed right through that. Remember the downside target. So let me get you the scalp, I guess, at this point. First of all, right before I move into the scalp, I just want to highlight a couple things. A, you got a trend line support that dates back to the yearly low, a trigger in momentum that's right at 50, and we'll watch to see if today's close respects that support or not. In price, the lower median line parallel of the formation off the low, which is the same slope that we're looking at here, comes in just lower, okay? So you can still envision a scenario where the euro could sort of run for a tag of the lows here and then move higher. But at the end of the day, this is sort of the near-term support that we're looking to respect here on the euro. Here's what we're looking at in the 30-minute. Okay, so from yesterday's trade, we were looking for, or we were sitting on that 111.50 support. And as I said in the note, we're off the short exposure. Remember, this was a bullish invalidation level. So once that gave out, we were looking lower. I had actually not participated in this drop at all, guys. Just didn't have a chance to get into the position. Long story short, at this point, you've made a tag of the lower median line parallel. Nice confluence region with the 1150 target that we had highlighted. And again, the rebound, we're looking for a 60 break in momentum. I was looking for a break above this median line. I would have been much more comfortable if we would have woken up this morning to see that sort of giving out. Not really going to touch it at this region at 112. 112 is sort of what we highlighted yesterday. It's sort of where we needed to see this thing rally. Sorry about that. One sec, guys. Sorry about that. So we noted yesterday that we're generally looking, for some support with 112.26 and the lower median line parallel at 111 areas of interest for possible long entries. We haven't gone down there yet. I still think, like I said, on the daily chart, you could probably see that spike. There's that median line that we were looking at on the daily chart. So there is some room here for this thing to give us one more spill. On the rally here, momentum holding 60, support trigger in play. I still think that we could see a rebound. So I haven't really taken anything since yesterday. This was the near-term bearish invalidation level. We broke right through it in Europe, but here we are sort of straddling that region. So we'll look to see if the U.S. opening range offers any clarity. Here's what the 5-minute chart looks like so far. And European trade has set a decent range between 112.35, the low being 111.80. Okay, so that's sort of what we want to see give out here on this chop fest for the euro before we start to mount any type of convictional bias. I do think you might get one more pullback, but you look to buy that as long as that 1150 level holds, and specifically on the daily chart, that lower median line parallel. As long as these hold, you're still broadly in the formation. Now, what scenario? And this is important, especially with all the headlines that are coming out and all this nonsense. What's the scenario which would put us conviction back on the short side for the euro? That's a break below 110.50 and a momentum move below essentially 50 here on a closed basis. Okay, this would be the region of which, if it gives out, you're probably likely to see resumption of the broader trend. This is the 618 retracement of the advance off the lows. You got the lower median line parallel, which would need to be broken by that. Like I said, it would be a rebound in momentum into 60, then a trigger break. But barring that scenario, guys, on a broader scheme, this thing is still not, still hasn't necessarily given us the reversal, I think. So JT says, hey, Mike, could you elaborate on how you select invalidation levels? JT, so the invalidation levels are from a technical standpoint, right? What level, if which broken, sort of changes the technical picture, okay? And if we look at that 110.57 area, JT, it's the low that we put in for the week of the 5th. Excuse me, the week of the 8th, the week starting on the 8th, right? So it was that week's low. It was the swing low for the opening range of May. It was pretty darn close to the spike highs that you made here towards the end of March. And it's the 618 retracement, okay? And for me, I put the invalidation levels on the other side of a structure or a trend line. Let me put it in easy terms, trend line. So for example, I don't want to just say, hey, if this trend line breaks, I'm bearish, because we could dilly-dally below it. We could do a spike through it. And from a scalper like me, I don't want to get faked out. So typically my invalidation levels on the daily chart are going to require a break of that trend line. So I'll put it down at that 618, give myself some room. Even if it spikes lower and closes there, it might not be the end of the game, right? So I'll put it so that it'll require not only to break the current technical structure, but either a major key low, confluence of the fib, or a decent pivot in price. JT, does that help? Let me take a step back, guys. When I talk about invalidation levels on the daily charts, right, these are not for scalps, right? The invalidation levels for the daily charts are the broader trends. So what would make me look at this daily chart and say, you know what, I think we're in resumption of the bearish trend again for the euro? That would be a break below 110.50. Okay. Add to that, JT, they also have the 100-day moving average right in there. So a lineup of major key levels that requires a break of a technical structure that we're trading within. And, this is the technical structure that we're in right now. Does that make sense? Let me know if there's anything specific there you might not have gotten, or if I rushed through it. But the daily charts, we're using these to ascertain broader directional bias. On the intraday levels, they're a little bit different, right? Because if the invalidation level is broken, well, let me show you an example. The Aussie dollar would probably be the best example here. So the invalidation level here on Monday, or on Sunday rather, was 77.10. So once 77.10 broke, it's not necessary that you're looking for shorts. You're just no longer looking for longs, okay? Which means you're neutral, which is a bias, okay? On this one, to actually get the short exposure, to shift the focus to the downside, we would have needed a break below this, okay, which would have necessitated that trend line break and broken, or it would have necessitated a break of that trend line, right, and completed or went through 100% extension, which means the corrective type of play that we're expecting on two equal legs down is not the scenario that's panning out. It's a much deeper correction. So when we're talking about invalidation levels on the intraday chart, as soon as it breaks back above, that bias is in play again. Okay, so if we say that we're constructive, or the scalp bias is bullish above 77.10, that's the new term, bullish invalidation. If it breaks below, you're no longer bullish. As price is above, you are constructive again. So a little bit different from the daily charts and the intraday charts, but I hope that offers some clarity, JT. He says, thanks here, I missed out. So you're more than welcome. So now that we're on the Aussie, here's what we were looking at with Aussie yesterday. It's been a fake out. It's been a tricky play. I was very impressed, rather, to see the reaction that we got at this level. If you guys remember here in the webinar yesterday, we were specifically talking about 76.10 or 76.80 rather, as in, this is going to be a simple 100% extension or a simple correction. You would expect to find some support here. And then this was the region that we highlighted again in the webinar as the level that would invalidate or put us back on the constructive approach, right? The former bullish invalidation level was yesterday's bearish invalidation level. This break here was not a play. The play would have been on the pullback, specifically into the late Asia trade. You got that pullback to test that region yet again. Okay, and actually that one did see a decent momentum trigger here that would have given you some long side exposure. Momentum holding 40. The broader momentum signature hasn't turned over yet because we're still holding 60 resistance. So I'd be mindful of that. Again, let me adjust this trigger. And there's nothing wrong with playing the Aussie range, but near term, here's what we're looking at on the daily. And this is why I'm a little bit more cautious. You see that 100-day moving average at 77.70. You see how it coincides dead on today specifically with the upper median line parallel. That's the region you need to get the upside play back in focus for the Aussie. So it's been lackluster. It's been lackluster for sure for the last 2 days here. And Raj, to go to your statement earlier in the session, yeah, you'll have these times where you get a couple of days where the market's just chopping. That's exactly what's happening here in the Oz. So I think you get a little bit more clarity once you clear this formation. If you do see that topside break, you're looking for 78 to give out for resumption of the broader trend. Near term, wouldn't get too excited until we clear back above that. Any questions on Oz? Not my favorite setup right now. Not my favorite setup right now. But we are looking for some clarity here. All right, so moving right along, I want to go over some of those charts that we covered yesterday in the radar charts. So we went over this in a piece yesterday on Daily FX. You might have seen that if you're on the mailing list for that. As far as the sterling yen is concerned, listen, it's a pretty compelling case. I'm not quite sure that the scalp is primed and ready to go, but certainly from a longer term standpoint, a broader picture, it's a very interesting region for the sterling yen. So on the radar charts yesterday, I put 3 charts, the first of which was the weekly. And if you've been on Daily FX or if you've been following us for a while, the yearly forecast that came out in January, my trade of the year, is still going to be sterling yen. It was for the last 2 years, but here's what we're looking at on the weekly. So this is the chart that was posted with that report. And I just want to show you sort of a quick update on where we are right now. Okay, so this is sterling yen on a weekly standpoint going back to 2007. A long-term retracement from that 2007 high into the lows we made 2011 gave us these fib levels right here. We've already cleared the 50, so I've removed that. But more importantly, you're looking at this level here, which actually represents the swing highs from, I had this mapped out, the 2004-2005 lows. I thought I had that labeled, but let me do that. And more importantly, a 618 extension from the advance off of the lows that we made back in 2009. So this current median line parallel, you can see that median line has offered some nice pivots, catching the lows here in early 2012, catching the late 2013 high, and even offering some nice pivots here on this break. So that level coincided with that 618, with the lows from 2004, 2005, and we saw all that give out on this break to the upside, a sliding parallel of that same slope. Seems like it's catching the highs at this point. On the other side, I just want to point out that I tweeted this yesterday. You might have also seen this on MB4X. Here's consecutive days or consecutive weeks rally. Okay, we've now made a 10-week consecutive rally. We've never seen that in the history of sterling yen, or at least going back till 1998, which is the data that we have. So, over the last, decade and a half, almost 2 decades, there's never been a run of 10 consecutive weeks of rally. So what does that mean? It means it leaves the pair vulnerable. Is it a reason to get short? No. But price is at resistance. Momentum is at resistance. If this high holds, you have some divergence on the last 2 highs in momentum. and it could suggest that you're going to likely see a little pullback in price. Reversal? No. Scalp-wise, we would use that pullback on the shorts, medium-term swing, longer-term position. We would use that pullback to get back on the long side. It's clearly an uptrend. There's likely to be a lot more. In fact, you heard Wheel come out and say that the BOE may be ready to raise rates in August, right? So we've had the discussion here, guys, before about where the BOE stands, and in my, again, humble opinion, I think they're just as poised, if not better poised, possibly, than the Fed to actually move on rates. So that divergence that you're seeing with the BOJ, which is likely to still have a lot longer to go to achieve that 2% inflation target, is likely to keep this pretty well supported. But there's some compelling reasons here to be looking. There's some compelling reasons to be looking for some near-term pullback or some near-term resistance. At the end of the day, if this breaks out, the target that was noted on that report back in January next is right up ahead, 199.80. Long way to go. Now, again, it's all about risk to reward, and that's why we can't do anything if we do get the breakout. There's nothing to put your stop against. We would need, hopefully, to get some sort of corrective pullback here to get us on the long side. Does that make sense, guys? Jay Jackson saying Sterling Yen is your trade of the year for 2 years. Yeah. So we're asked to write, a couple of pairs early in the year for Daily FX for that they provide to various institutions and also on Daily FX, the website. And mine for the last 2 years has been Sterling Yen. Yeah. It's supported by Jay Jackson, not just the technicals, but the fundamentals as well. Right? So it's a double whammy. The other trade of the year for this year, actually, if you want to go over those real quick, was Sterling CAD. And I do believe that's up at resistance right now. Yeah. So this was the other setup from January. And again, we opened the January month with a rally right into a major key threshold of resistance. The pullback paired the entire rally almost. And a nice pivot there at former trendline resistance off last year's high. And a nice 38.2 caught that low. Really nice. And here we are right back at the highs. Okay. Momentum couldn't even get a tag of 40, right? It looks like we turned right ahead of 40 momentum as well. And this is the weekly basis, guys. So even more credence gives to this. But it's a very similar setup as Sterling Yen, right? Price is now checking a major high. It is checking the yearly high on this. A little bit different because Sterling Yen's at fresh highs. This is not. But nonetheless, you're still getting divergence. Right? Lower high in the oscillator, higher high in price. And again, we're looking only at the closes. When you're trying to ascertain divergence, the spike highs and lows hold no bearing. All right. So there's a quick outlook on that, but let's keep with the Sterling Yen drill down. So again, now that you know where we are sort of on a broadly weekly basis, we've been posting consecutive advances essentially since the low that he made here in March. That's literally since March 11th. This thing hasn't had a losing week. April. And here's what it looks like on the daily chart. Whoops. Okay. So a near-term structure just off of this year's low with the daily chart. Put that rally we made last week right into the trend line resistance or the upper median line parallel there. And pulled off. At the end of the day, what I said in the video yesterday, if you guys watched the accompanying video, is this. This thing's in overbought condition. As long as that condition exists, the potential for the market to continue to run is there. I'm going to say again, as long as that condition exists where the oscillator is in overbought condition, the potential for the market to run is there. That's when the market has the strongest push, right? And we took a look last week, we were talking about this. We took a look at a couple of pairs which had conditions in overbought for months on end, right? But if you see a 70 break here in momentum and a break below, this is a sliding parallel of the same slope that we were in for the last 2 months there. You'd look for a corrective move down to the R1, down to the 50% retracement, which happens to line up dead on with the 2008 swing low, which has been a decent pivot in price actually going back a few years. So we'll see if that materializes. At the end of the day, they had a really nice opening range for the week. Now, an overnight, you might have gotten faked out on this, and here's what happened. So here's the opening range for the week. The title for yesterday's article was obviously citing 95 and 50 as sort of the opening range highs for the week, and the long side is vulnerable below that. You did get a quick break in overnight trade here on the open of Europe to check last week's high, and then we pulled right back below. So again, the invalidation level, as long as we're staying below that, I just want to check one thing real quick. Where's that report? Okay. It was there. The trendline resistance from last week. Also a really nice pivot. That's what I was looking for. Do you see how many tags this has? Break. So we can dismiss this as a false break because here we are checking it as resistance again. If we get through 95.50 again, it's probably going to see this thing plow right through 95.80. Long story short, we're looking for a pullback to get back on the long side, guys. So we'll raise that target with a break, or at least the near-term support. We're going to now highlight this as sort of the more critical level now, where yesterday we were looking for 94 to be a little bit more of a hard press as far as where we might look for more longs. Here's the opening range low, which now coincides with that sliding parallel. So this is still the range in focus. Still the range in focus is 95.50 into 94.60. And again, the major resistance, 96.46, is going to be that 1618. 96.46, 96.37 here, 10 pip range. A lot of this is prefaced as well, guys, on yen weakness, right? And certainly the yen pairs do look poised in proper fashion as the yen typically does. Here's what the dollar yen looks like to start off the week. Again, here we are, on Monday or on Sunday rather, we talked about that major key region at 124.13, 124.35. This is still major resistance. Okay, is your FOMC high or the day before FOMC there? It's the 1618 extension off the lows they made in December, and it's the actual stretch highs for 2007. So below that region, the long side of dollar yen is still vulnerable. We'll see if that 60 level holds in momentum here today as we try to make this move. Again, U.S. markets come online in just 30 minutes. Remember, the data was actually pretty decent. So if the dollar does give us one more stretch into the high, look for that euro that we talked about. Look for the Aussie right around that 77 handle again. Again, euro, look for that 111.75 to offer some support. Specifically on a dip into 111.26, this is a region, again, we'd start to look for more longs again. But kind of taking a neutral stance here as we are midweek. The opening range did break to the downside. And for me to get back on the constructive approach, we need to see that momentum really change the behavior. See a 60 break, see a hold at 40, something. But I hear you, Rush. Hasn't been the easiest market necessarily to try to play this near-term trading, especially on these days where we kind of just get some sideways chop. Raj saying I got stopped out because of that spike high in dollar yen. Yeah. Well, again, I want to ask you one quick question, Raj. Was that trade based on the swing setups, or was it based? Oh, he's talking about sterling yen. Okay. Well, before I move back to sterling yen real quick, here's what I'm looking at: the near-term structure for dollar yen. This was that confluence region we highlighted yesterday in the webinar. Still basically the same level, 124.35 that we're looking at on the daily chart. Area of interest, of resistance, area of interest for possible re-entry on the short side of the trade. So we'll see, again, a structure that we added on Sunday night that was really, that hadn't had too many touches yet, but seems to be guiding price action rather well. Nice confluence catching the highs. A little false breaking overnight there, but largely speaking, on a closed basis, we've continued to respect that sort of formation pretty well. So Jay Jackson says, good shot. I'm not sure what that was referring. Oh, he's talking about the sterling yen trade of the year. Thanks for that, Jay Jackson. Again, longer term prospect trade. Raj saying, so are you in the sterling yen trade? No, I don't have any positions on for the trade of the year. not necessarily my style. I'd rather use that open margin to near-term trade, swing trade, scalp. I'm not usually one who'll sit and trade for a couple of months, but the setup is there, and irrespective of whether I take the trade or not, the setup is there. Got a comment here from Eileen saying the hard part of a reforming chaser, I like to call that trading breakouts, is still not good. RSI stays in overbought, but should not chase the move. Wait for the risk reward to pull back. Eileen, that's exactly what it is. Listen, regardless of where RSI is, whether it's overbought, oversold, giving you the trigger, not giving you the trigger, opening range break, not an opening range break, regardless of any of that, nothing supersedes basic support and resistance, and nothing supersedes your risk-to-reward ratio on the trade. That's all that matters. That's all that matters. You could get the most clearest trigger in the world, guys. I mean, I'm talking everything could line up at once. You can get a weekly opening range break as the U.S. opening range break is happening, as you're getting a momentum trigger break in RSI, and everything looks golden. Where the heck is your stop? It's the first thing I say to myself. As soon as I want to even look at a trade, where's the stop? So we have to make sure that we're staying as objective as possible to what really matters. At the end of the day, you're not going to go to the bank and say, hey, there was an RSI trigger. Can I pull out my cash? No, right? It's going to be based on the profit or loss, which is why that's all that matters. You have to make sure that on every trade, your stop makes sense in comparison to what you're looking to make. Eileen says, sounds right. Raj says, Mike, can you take a look at oil, please? I am long. Sure, we'll definitely take a look at oil, and some of the other commodities actually look pretty interesting, but I want to stick here, go back to sterling yen real quick for Raj. Or Raj, actually, we're on sterling yen. Do you have any questions on this, Raj? Before I move on. Okay, good to go. Looks like I covered all the questions on this. Yes. All right, we're all caught up. So let's move on to your questions. Any trade setups you guys want to follow, feel free to throw them out. The commodity market, excuse me, has been quite interesting. So crude, I actually haven't updated the chart this week. Let's see what's happening. You're long with stop against 59. Well, I'll tell you one thing. I like where your stop's at. I'm pretty comfortable with that. You're basically below the weekly opening range low. But here's what I would say to this, Raj. What's your target? If your stop's at 59, what are you looking to make on that trade? 65. Okay, so here's my problem with that trade, Raj. You're essentially targeting something outside of a range that we've been holding for, what, 4 weeks now? So, Raj, how do you know this is going to break to the upside? I don't know, right? I can tell you the broader directional trade, sure, it's constructive. But unless I have an entry towards the bottom of the range, I won't target something above the range. So, Raj, let me play this for you a little bit more simple. If we had gotten a long exposure near that 58 level, okay, or near that 59 level that you're in, near the median line support here, or specifically, more importantly, near the entire range, then on the top side of the range, I'd be looking to take half, 3/4 of the position, stops at break even, and then see if you can get the break. But for me to take a position mid-range, expecting that I'm going to be able to call this break, based on what, Raj? Based on what, man? Right? We have to stay as objective as possible. Yeah, you might be constructive on the crude trade, but guess what? You could have been constructive on the crude trade since May. You wouldn't necessarily be wrong, but guess what? You haven't made any money yet. Right? Because we've been in this same range for almost 2 months. So that's my only issue with that, Raj. I would be looking to take something. I would have been looking to take something at that 100-day or 200-day moving average right here, near the close highs for the month. And if you want to try to hold out some for the breakout, I'm all about that. But I'm only looking to play that if I'm already in the money, I've taken something in my pocket, and my stops are break even. Right? If we look back, guys, at the broader pool of traders, the biggest issue that you see, obviously, is that they're very quick to pull profits and very slow to cut losses, right? So running your winners is always going to be in your best benefit, but that's only when you've taken some off the table and you're in a breakout mode. The market has clearly given you that directional bias. I don't see that here just yet. Raj, does that help? I don't mean to come down on you, my man. I just want to put things in perspective on where this trade has been, because it's just been this godforsaken range we can't get out of. So hopefully we get this play at some point to clear this range. And I'm with you. I do actually favor a topside break. But the validation just isn't there yet. I do like where your stop is, and one thing I would keep your eye on is this trend line resistance that dates back to the highs that you made back in June of last year. It looks like we're trying to make a break above that. Yesterday's close technically did close above it. So on the pullback here, try to find some support as you head into 60, actually near term. And if this region holds of support, it'd be a little bit more compelling that we could see this thing start to break out. And that would sort of coincide pretty well with, the dollar giving us a little bit more of a turnover here. It's tough to make this call on the dollar, guys, because there's so much going on here. But below 11,880, 11,887, I still think you're at risk. Raj, does that help? He says, okay, sounds good. Mark, great to see you. He says, could we look back to dollar yen, check what it looks like on the long trigger on the 30 and a 5? Sure. So here's dollar yen on the 30 minute. Let me see here. And on the 30 minutes, I don't necessarily think I see a trigger here on the 5. There's an interesting support trigger. Not the most compelling, but this would have been the long trigger into the open of European trade. So watch those weekly highs right into 124.14, 124.15, and then again 124.35 is sort of the major resistance and that upper median line parallel. So if this thing gives us a little bit more of a rally, like I said, dollar makes that one last stretch, euro makes one last dip, could be a play here that we might offer some resistance a little bit higher up. But generally speaking, looking for more signals, we're looking for more technical factors to suggest that this thing might start to fizzle out here towards the middle of the week, end of the week. Mark, does that help? He says, I like the Aussie here with a 76.95/90 stop, not based on RSI, just a 4-hour chart. Let's look at the Aussie again. Generally speaking, me too. Me too, Mark. I'm looking for basing. I'm looking to stay constructive on the Aussie above 77. Remember, that's the invalidation level. I'm losing my voice here, but we dipped below it yesterday. Excuse me, we dipped below it yesterday, and then the recovery went right into the 100% extension, then popped right through. So I do favor a hold here. The only thing I said in that piece last night was this: the momentum has continued to hold 60 here. It just won't break. So if anything, at best, guys, this is a range-bound momentum signature, and it's exactly what you're seeing in price. So I'm not against that position, Mark, at all. I'm not sure where 95 comes from. If that is that a level that you're specifically looking at, but I'm more looking at that 77.10 region into 77.11, that 618 extension off the high, and then that 77.10 region is actually a really nice pivot in price. Going back a few weeks here. So a nice region where if this thing is going to hold, you'd like to see us find some support here, specifically if momentum holds again and reverses ahead of 40, play the range. So Raj, this would be a trade just like the oil trade that you're in. On the long side, guys, towards the upper side of the range, I'd be looking to clean it up, take quarter off, take a half off, bring your stops to break even. If you want to try to play the breakout, because we are constructive, I'm with it. But, we shouldn't be looking just to try to play the breaks ahead of a trigger or something to suggest that the break has actually materialized. What we think, what we want means nothing, guys. It's all about what we see. Mark Lavender says, thanks, that helps a lot. You're more than welcome. Mark Haverman says, I agree. There are holds, but usually it pulls back after so many touches and then crashes through it. It's a cowboy trade, yeah. I mean, again, you're trying to fight the intraday trade, the intraday momentum here. And obviously the European session saw a spike and a rally into that 7760, 7780 target, then completely reversed, right? And here we are with momentum now looking for 40. So keep in mind that the opening range broke to the downside. Typically, essentially, this is the break we needed above to invalidate that signal that happened earlier in the week here on the 22nd. So we'll see if we can't get a hold on that region. Here's a near-term trigger you might want to keep an eye on. But with the Aussie, more so than what's happening here on this chart, I'd be looking at the daily chart. And the fact that we came right into that and reversed, you know, you could see this thing kind of just hold this range, chop sideways for more. Sterling Key, Raj, coming right up, my man, says, Mike, can you look at Sterling Key? Is there a bear setup for a short-term pullback? Could be. I can tell you on a trade like this, I wouldn't necessarily be interested in it. I'd be more interested in playing or using that pullback to get back on the long side. So a quick review here. This is something I was just kind of panning over yesterday. We did just miss the upper median line parallel of the formation dating back to lows we made in 2011 on this last stretch. Also, the current operative formation off of this year's low. You know, we're kind of probing above that right now. We're kind of trading at that level. The reason I don't like any type of short exposure here is for two reasons, Raj. A, the momentum signature, as you can see here, is an overbought condition. It's been so for the majority of June trade, right? So as long as that condition holds, if it breaks 70 and we make it back below 2760, maybe that'll be a play for a more steeper corrective action here. But aside from the RSI signal being an overbought condition, the other thing I'm not too thrilled about is the fact that I don't want to necessarily be long Kiwi, right? That last support target in Kiwi dollar that we've been looking at is being tested as resistance just now. This is a huge region. And I want to bore you guys by going over all the levels again, but there's a lot stacked up here. You got, and they're all 618s. You got 100% extension, a 50% retracement, a 618 extension, S1 monthly pivot. You name it, it's all stacked up in this region between 687 and essentially the, 68.75 and the 69 handle. So for me, you know, as long as they stay below this median line, I don't necessarily want to be long Kiwi. Now, just because Kiwi dollar is moving lower, does that necessarily mean that Kiwi broadly is going to remain lower across the board? No, maybe not necessarily, but it's going to be hard pressed for me to take a short sterling key. Let's say that. I'd much be more interested in using that pullback to get back on the long side. And again, one thing you want to keep in mind, Raj, is this, and I'm just saying this, man, because it seems like you're looking for setups because it's been sort of a couple of frustrating days, but this is what I want to say on this. For the sterling key, you know, we need a lot of technical factors to start panning out to suggest that this thing's turning over, and they're just not there yet. Also, if you've been having a rough couple of weeks from an intraday standpoint, this is one of your largest ATRs, Raj. Okay, so yes, the gains will be much bigger, but also when we're wrong, they're going to be a lot bigger as well. So you might kind of want to go to a trade that has a little bit less implications until we get a little bit more of clarity in broader market conditions. That being said, even on an intraday basis, if anything at best, it is putting in some sort of near-term topping, but even the momentum signature hasn't really turned over, right? We've continued to hold 40 support. And the pullbacks have been so extremely shallow, so extremely shallow. So something maybe that'll come up on the radar if we get that Kiwi break to the upside, or specifically if the sterling cross is correct. Remember, sterling ends on its 10-week rally streaks here, so I don't even know if I want to necessarily stand in front of that. Kiwi yen is another one that has a very similar setup, but because, again, the bias of where the Kiwi is, and especially what we're expecting from the yen, not necessarily ready or primed for a play just yet. I need to get back above essentially 85.80 to clear this median lines here and get back above that nice pivot in price if you look back. Real big level. And Raj says, yeah, that's true. All right, cheers. I hope that makes sense. Would you move on it before the opening range is set, Mark Lavender says. Oh, you're talking about the dollar yen setup. Yeah, if the trigger is necessarily there, but I can tell you this, guys. I mean, don't take my word for anything. Go back and look at prices and see if that's true. But if you look back at the last couple of opening ranges, and I like to do this as a drill for myself even, just bring up a 5-minute chart. Look back at the last few opening ranges. Here's the European opening range. So Europe opens for the first couple of minutes. You set that range, right? It breaks to the upside. You get a nice stretch, but the opening range, again, has been completely paired at this point. Now we're breaking through the lows. Here's the opening range for Tokyo. That broke to the downside late in the session, gave you a little stretch, but here we are, we paired the entire opening range. So for me, a lot of times the opening range where the market opens will be right in the middle of what the opening range is, which is what I'm trying to explain to you. So here's the Sydney Open. That's right slap in the middle of what the range is for the day. Here's the London Open, right? Right slap in the middle of the ranges for the day. And these are when the opening range strategy will not give you all that much clarity. And it's important that we know that. Opening range strategies, guys, work best in trending markets. If the market is flat, the opening range is going to chop you up. And it's important that we know what the weaknesses are of our strategies. And that's one of the weaknesses for opening ranges, which is why opening range in and of itself is not a strategy. Combine that with an RSI trigger, combine that with a break of resistance or support. That's when it matters, right? If you have a market that's like this, the opening ranges won't be all that clear. And you can see that in price. And again, every time you look at something like this, you guys, you got to go back and price and see how it pans out. So here's an example of an opening range for yesterday's. This is the 22nd, earlier in the week. That panned out really well. Here's your U.S. Open. It pushes into a high. You came and tested the low. It held. It broke that low. You're bearish against the high. You close the session pretty close to the lows, right? Even the Asia Pac opening range on the 22nd as well, heading into the 23rd. Sydney opens, set a low near 77.20, you set a high near 77.40. You see a break of those lows, bearish against the highs, stretches into a low towards the end of the session. So when we're in a range-bound market like we're doing now, you don't get all that much conviction on trying to use the opening range aggressively. So typically to take a position ahead of the U.S. Open won't be my best play. I can tell you this, a lot of times the opening range will stretch into a higher low. So if the opening range for the U.S. is coming into play and we're looking at the Aussie and it's stretching right into a support, like we are now, at the open, if you see some sort of reaction, you get a momentum trigger, that's a conviction low to trade against because you also have that low from the previous session. And this is going to be your European lows. Right? Does that make sense? So, Mark, let me know if that offers clarification. Wonderful clarification of opening ranges. Wow, cool, says Eileen. Aurelian says CAD looks like it wants to set up a new year, June high. I'm not sure what that statement means, Aurelian. Let me take a quick look. Mark says, helps a lot, thanks. Hey, more than welcome, man. And here we are. It looks like this is breaking the lows here in Aussie. And this is the reason that I'd be very cautious, because if this thing breaks into a low, spikes, holds, the opening range now is set into that low. Meanwhile, now you're just already in the trade, right? On a long side or whatever position you're looking to take. Now the opening range has just been set. So you want to be cautious on that. I'm still broadly looking for this thing to offer some support. Slight divergence on the 5-minute for the Aussie. I can see that. Yep, we made a new low. The oscillator is making higher lows. I don't think we can ascertain that or assert that as a low just yet, but I see the idea that you're looking at. Sure. Let it settle. Let it settle. Again, I think the Aussie, I was talking with Jamie yesterday, and he's on the same side, so he doesn't really want to touch this right now. Me neither, but I still am looking for some sort of support. And as long as it keeps breaking lower, guys, that's fine. I'm not, on the long side or anything. I'm looking for triggers. I'm looking for basing. As long as we don't get it, we'll continue to wait this one out. But seems like Aussie's going to do some wicked stuff again. So on dollar CAD, Aurelian, here's what dollar CAD looks like on the daily. I think, if I'm not mistaken, we had dollar CAD on Sundays. So here's what Sunday's chart looked like. We're looking at this median line resistance or upper median line parallel off the highs. We broke through that the next day. Yesterday, we closed above it as well. Okay, the resistance level that we're looking at, again, it's the same exact setup we talked about yesterday, guys. I don't think there's, again, really a lot to do here. Real quick. Oops. Here's what the intraday chart looks like. Okay. So remember, let me zoom this out real quick. Snap those lines. There we go. Okay. So, are you talking about, Aurelian, you talking about a new June high? Set the new year into a June high? I'm not sure what your question is asking. We were talking yesterday about the fact that this momentum was very constructive, especially with the bounce that you got early in the week off 40, and then you're above 60, you're above 60. We talked about the divergence into the highs. That gave us a pullback, but again, broadly speaking, it's held at 236. It's held basically 123 as support. Again, for me, it's a chop fest, guys. I'm not interested in playing it. At the end of the day, it's kind of been the same range we've been in for the last 2 weeks. And the dollar will make a definitive move here, guys. I feel like we just need to be really cautious. Like I said, I'd rather be looking at sterling CAD, which is the one I was looking at earlier with you guys on that weekly chart, as that's coming into a major resistance. But dollar CAD, I'm either going to need to see a break back above the opening range low for the month that initially put us bearish, so a break above this region to get back on the constructive side, or a compelling short trigger against that region to get back on the shorts. But for the dollar CAD scalp, it hasn't materialized like we thought it would. So it's not something I'm going to be necessarily focused on. It looks like this dollar rally is going to fake out a lot of people again before it starts to move, and I don't want to be part of that. So you have to remember what our broader setups are looking for, guys. And if we're looking for the dollar to give us some sort of near-term peak here, then I'm not going to be too aggressive on jumping on dollar longs, right? Maybe on a hedge against a position I'm holding. So if I'm really aggressively short dollar yen, or if I'm really holding a larger position on the long euro, sure. Maybe you want to try to wait for a dollar CAD to come into resistance and give it a short, or maybe on the pullback rather you want to take the long, which would be the counter trend trade of what we're looking at with euro and Oz. But in general, it's all about trading against a key level. And for the dollar CAD at this point, I need to see it get a little bit closer to that 124 region before I try to press any shorts. Sorry, Aurelian says, sorry, this momentum in the last couple of days without fundamentals, you are right. It's a choppy market. Exactly. And that's completely okay. We need to recognize what market we're in. When we get those stretches, like when we were on the long side of dollar CAD last month, that was beautiful. Even on the opening range break this month was a nice play. Kind of stalled out ahead of support here, but he inevitably got that dip into major key support. So, you know, that being said, I need to see something a little bit more compelling on that. Some other trades, guys, if you have, we got about a minute left. Mike, is the midweek webinar still on today? Sure is, Raj. So again, guys, at 1 o'clock p.m. Eastern time, Jamie will be on today with his midweek strategy webinar to go over some of those swing setups that he's looking at. Quick note, guys, on the Euro Oz, this is something we talked about on Sunday. I was looking at this yesterday. We had a really nice move into that key region of support. Technically, we closed below 44.50, which is in my mind what was the near-term bullish invalidation. Here we are checking that same median line again as resistance. So another one I'll be watching very closely today to see if we get any type of conviction move. If we pair this move and close back below it again, that would suggest that we've made some sort of near-term high, and you'd look for a measured move essentially back into the lower median line parallel. Again, not quite primed yet, but something to watch into today's close. Finally, the gold trade as well. On the break of that lower median line parallel, looks like we're pushing through last week's lows as well. Basically, key support near term 1163, and then right down to the 1150 zone. So today's close will be important there as well. Obviously, the euro and Aussie we've covered. Kiwi dollar on the intraday, there's no levels, but again, on the daily, we'll have to see if this resistance region holds. If we close back below it, guys, not a trade I'm trying to fight. Okay. So it still looks like you got tough times here for New Zealand. Can you go to the $1.30 minute? I would like to take a screenshot. Sure can. Here's the $1.30 minute. Really clean levels, guys. Really clean levels. And again, I say this all the time. I know that we can't trade this index here stateside, but can offer a lot of clarity as far as what the base dollar's movement is doing. And that's just because it's on its inception equally weighted with the 4 most liquid currencies, where the ICE index is very, very Eurocentric. So this one gives me, in my opinion, gives you a lot clearer picture of what the base dollar movements are doing. By the way, Steve, asking about the screenshot, I just want to let you know, man, that's actually the same exact levels that are highlighted on yesterday's radar charts. Whoops. Same exact levels. Nothing's changed. We were trading right around here. We came to that key support. If this holds, you're looking at resistance back at 1180. And that's really the near-term bearish invalidation level if we see a move above that. Andy, I did not look at cable, and thank you for reminding me. Here's what sterling looks like on the daily. Okay, we're checking lower median line parallel support at this point. Yesterday we came right, just pips off that 56.98 level. Sterling on the intraday looks like this. This is the scalp that we published here on Daily FX on Monday, rather, excuse me. Really clean as far as the levels are concerned. There's that same formation we've been in off the lows. Checking support right now. Again, another trade that offered a pretty clean opening range for the week. Here's the high that you set. Tuesday sets a low. Wednesday, I guess this is actually 22nd. This is yesterday. Tuesday sees the break. You check it as resistance. Wednesday, checking it as resistance again. Here we are checking support. So for the pound, I'm actually looking for, again, more signs of basing here. I'd like to stay constructive above 57. That's a major key support. If 57 gives out, you're likely to see this thing fall apart. But broadly speaking, I'm looking for long triggers well above this region. This was actually the region of which to do it. And it's too bad I didn't look at this last night, because this actually looked like a really clean break. That would have been a nice scalp to the upside. Here we are again. Let's see if there's any 5-minute triggers on play here. So multi-touch, it's 4 touches on that. Could be a play here. Any stops that you take would have to be against 57.30. I would kind of like a stop against 57, but that ship has passed. That was here last night, ahead of right into the open, I guess, of Europe is when you wanted to take that position with a stop against the low. At this point, again, anything that you take would have to be against. I would do against the Asia Pac low. Basically, like 57.20. So, oops. So let's see if that trigger gives out here on the 5-minute before that one actually plays out. You are getting slight divergence there towards the lows. Nothing to write home about yet. Definitely something to keep in view as we go into the U.S. Open here. Mike, Euro Oz 5-minute divergence. Are you looking to short this pair? I am actually not looking at Euro Oz as a scalp, guys. Again, I just wanted to point this out of where we are. If this resistance holds and we close back below 44.50 is what I would like to see. This thing has been a chop fest for weeks. Yesterday was the only clear definitive move that we've seen in quite some time. So before that starts to pan out, you guys look at the chart that we actually kind of reviewed yesterday. I'm not sure if I brought this up in the webinar. This is the formation I'm looking at. It looks like the median line parallel was a decent structure to play off of. But this is sort of an area of which I would like to get back on the short side, possibly, if you stretch into that. Otherwise, you'd want to see a break below. There we go. Yeah, I need a more assertive move below 44. It's the same level we're looking on the daily chart, Raj. Nothing's changed, man. Nothing's changed. Need either a close below that or a stretch into a little bit more of a conviction resistance trigger, like this. And actually, if you take a retracement, and I'm just eyeing this out, I'm pretty sure it's going to pan out exactly like I think, but if I tack on a quick retracement, that'd be about the 50% retracement of the move right there. All right? So it'll be a little bit more of a conviction trade, in my opinion. Watch that daily. That's the most important thing right now, as when we close today, what this thing is doing. All right. I'm over on time. Guys, thanks for your attendance again. Later today, 1 o'clock, Mr. Setley will be on for his midweek strategy webinar. I will be back on tomorrow morning, 8:30 Eastern, for the last session of the week. And hopefully we'll get some more clarity here, guys. Listen, being flat is a position. If you're feeling like you're not getting much clarity in these moves, I don't blame you. I'm right there with you. There will be plenty of opportunity. I still think that dollar yen, watch that key resistance at 124.35. That looks very, very compelling to me. And obviously the pairs that we covered today, we'll see if we can get some more clarity on those heading into the latter part of the week. Best of luck trading. See you guys all tomorrow. Cheers.